Hey there. Today I want to talk about taxes. Everybody's favorite issue. If you haven't filed yet in the United States, your federal return is due tomorrow. So go ahead and do that now. Come back to this later and we'll worry about next year's, okay? Little important so you don't get a penalty or anything like that. But I want to talk about this because taxes are important for everyone. They're probably the biggest expense in your entire life that you'll have year after year. And part of building and growing wealth, or I should say, maintaining wealth and allowing it to grow, is not just making more money, but it's holding on to the money you have, and that is lowering your expenses. And as I said, one of your biggest expenses is going to be taxes. So, again, tomorrow, dun dun dun, is the due date. So make sure you got that under control, and then let me talk about how taxes impact everybody. I don't care if you're an entrepreneur with 5 businesses, 6 real estate holdings, and investments, portfolios, all kinds of stuff, or if you're an employee who works at a single company, taxes impact you in a big way. And even if you delegate your tax filings to a professional CPA or something like that, it doesn't matter. You need to understand the basics to be able to make the right decisions in your life that are going to impact those taxes in the long run, okay? And there's a saying I like, you can't delegate what you don't know, and that applies here as well. You don't need to be a tax accountant. You don't have to memorize the code, but you really need to understand some of the basics, and that will take you a long way, okay? So let's start by looking at tax basics. Awesome. So the first one I want to talk about here is the fact that you can just save money through tax incentives, okay? The code, as I mentioned, is just insanely complex, and really the reason is because the government incentivizes various actions that they want the population to take, basically, by making tax cuts, okay? Now, there are other reasons that the tax law comes about, but one way or another, you can always follow incentives. And if it's very costly to do something, fewer people will do it. If it's very beneficial to do something, especially financially, because that impacts everything in our life, then more people will do it, right? Why were there, first-time home buyer credits and all this stuff, especially right around the crash? Anybody think about that? It's because they knew this stuff was going to happen, and they were trying to incentivize people to buy homes. Okay, so just a couple of specifics I want to hit on today. First of all, if you are an employee, you really need to be looking at IRA, this is individual retirement account, right? A very common one is called a 401k. That's a common employer deal. The government also, and tons of other areas you can find in individual retirement accounts. All this means is it is money you contribute today that can benefit you in your retirement. Now, there are a couple of different kinds. For instance, let's just go with the 2 basics. A traditional IRA means that you put money in today and you don't have to pay taxes on that money until you withdraw it later in the future when you're retired. A Roth IRA is kind of the opposite. You pay your taxes like normal today on the income you earned, but then when you take that money out in the future, not only is that not taxed, but the growth of that money, which in theory with compounding interest could be a lot, your earnings from that money won't be taxed either. So in general, if you think tax rates are going to go up, which is, I guess, my personal opinion, and a pretty good one, I think, if you look at tax rates and anyway, I won't get into all that. But, if tax rates go up, then that could be a good idea. But either way, the biggest reason to do this if you're an employee is because lots of employers match contribution, which means if you give a certain amount into a retirement account, one of the employer benefits that they provide is that they will match a certain percentage of that. And that is, I hate to say this because no free lunch and everything, but that is literally free money, okay? You could say you're already paying for it because you're an employee, etc. But the point is this. If you can put 6% of your income into an IRA or 401k, whatever, and your company will match 3% of that, then you just made a 50% return on your investment by making that one decision. And you can't find those returns anywhere else. So I recommend doing that. Entrepreneurs, this is a commonly missed huge deduction, okay? When you become an entrepreneur, a lot of people are shocked and appalled by this little thing called self-employment tax. What that is Social Security and Medicare taxes. You as an let's go back to the employee. The employee normally pays, right now it's 2.9% of their income towards Medicare, and 6.3 whatever percent to Social Security, and their employer pays the exact same amount, okay? When you become an entrepreneur, though, I feel like I need to go back here so you guys can... there we are, so you can actually see me. If you become an entrepreneur, then you no longer have that employer. You are your own employer, hence self-employment, right? So adding those two together, the 7.65% of your income that is taxed for Social Security and Medicare that your employer used to pay, now you're on the hook for. And that's kind of a raw deal, and that's shocking to a lot of people, and they don't plan for it in their budgets and finance and business plan, if they even do one. But that's important to know. Now, what a lot of entrepreneurs miss is that the part that you are now paying, that your employer used to pay, that is tax deductible, because you're now your own employer, okay? So the expense of the employer, that's like a business expense, and that is going to be deductible, okay? Don't forget that one because it's a big one. Okay, so the next one I want to talk about is leveraging the time value of money, okay? So employees, if you work for a company, your wages have an amount withheld every single paycheck, okay? And then at the end of the year, when you owe taxes, that in theory has already paid them, and you should owe nothing, right? That's, again, in theory. Sometimes there'll be a little refund, sometimes there'll be a little owed left. But the idea is that you pay them throughout the year. Entrepreneurs do not have somebody withholding their taxes, in a lot of cases, right? I'm talking about people who own their own business, especially smaller businesses. So every quarter, roughly, you need to make an estimated payment to the government, okay? And then, again, in theory, at the end of the year, you've paid everything in the right, throughout the year, and you don't owe anything, and they don't owe you anything, okay? So what is the point of this? The point is that the government wants to be getting money on a regular basis. Because if they're not, then they're not getting interest on that money that they could be earning, right? This is the time value of money. Because of inflation, that four-letter word, $1 today is worth more than $1 tomorrow. And if I don't give the government, money on time, then I'm earning, in theory, I'm investing that money and earning interest or some kind of return on it that the government should be, okay? So they want their money and they want it timely. Now, just to look at the two and kind of contrast employee and entrepreneur again, if you think about it, as an employee, you get your money, the government gets their money before you even get yours. When that paycheck gets direct deposited into your bank account, they've already taken a chunk, right? Uncle Sam has his fingers in it before you've even seen it, okay? So that is getting paid timely. Now, big picture, entrepreneurs have an advantage because they only need to pay roughly quarterly, okay? But the same principle applies. They want their money in a timely manner, but being an entrepreneur does have the benefit that you have a little extra time to, in theory, benefit from that cash, from whatever you're putting it into, and earn a return on before you owe it to the government, okay? So let's look at the last one here. Learn the game of money. Okay? Now, first of all, I had a fun little quote, and there'll be a picture of it somewhere. I added it up. But that is, I'm sure you've heard the first part of this. Don't hate the player, hate the game. If you still play the game, learn the rules. Okay? So we can complain about the rules in the game as much as we want, but if you live in the United States, you deal with the U.S. tax law. Or if you don't, you're going to get in trouble. Okay? So we've already decided to play this game. We need to learn the rules. All right? Now, here are a couple of reasons that I hate to break it to any full-time employees out there. Entrepreneurs get better tax treatment. Simple as that. Okay? These are two of the big reasons, and I hope I can convince you of this, because even if you're an employee right now, that's fantastic. But it really does behoove you to think of a way to start a business on the side, maybe grow that business to the point where you don't need a job anymore. But either way, having a second source of income, that's going to make you an entrepreneur already. Okay? So the first one of these, like I said over here, is the earned versus passive income. Okay? So what that means is, as an employee, all of your wages are considered earned income. And earned income is taxed at the highest rate possible. And it depends how much you make, but you're going to be taxed at the bracket that you fall into, and it's going to be higher than, say, for instance, long-term capital gains or passive income, rental income, all these different sources other stuff can come from, right? So a business can find ways to have passive activities and get taxed lower. If you own rental property, that's taxed at the lowest rate. If you have investments that are paying dividends and, like I said, you have long-term capital gains from selling something, then those are taxed at lower rates, okay? Now, we could get into the morals of this and what's right and wrong and the motives of the government for the rules being as they are. But it doesn't really matter, because the rules are what they are, right? If you have time in your spare time to lobby and change the tax rules, that is fantastic. You go do that. And maybe I will someday too. But right now, the fact of the matter is, earned income is taxed higher, okay? Now, like I said, the morals. Should somebody who works really hard for their money be taxed higher than somebody who's mommy or daddy gave him, an apartment complex when he turned 18? My opinion might be no, but that doesn't matter. Morals are gray, and this is how it is. So, know the rules here. Earned income is taxed at the highest rate, so you want to minimize that and maximize other forms of income. All right? Go back here really quick. The second one here, this is another reason why employees get pimped, and it's good to be an entrepreneur as far as tax rules go, is wages versus taxable income as it applies to your expenses. Everybody has expenses, right? Businesses also have expenses. And the big difference between an employee and an entrepreneur, as it applies here, is that an employee gets wages, and like I said, Uncle Sam grabs his share before you even see it. And then you go about your daily life, and you pay your rent, and you pay your electric bill, and you buy your $10 Starbucks coffee, whatever it is you do. But an entrepreneur has a business, and the business has revenue, call it income, whatever, and then it has deductible business expenses, right? So the top line gets lopped off by all these business expenses before it arrives at taxable income. And then the business pays tax on that. Now, of course, that individual who's getting money from the business still has some of these daily expenses like we talked about. But the key is that some of your normal expenses that you need anyway, they apply to your business. Great example is a cell phone, internet, home office, right here. If if you didn't have that business, you'd have that cell phone anyway, right? But if you use the cell phone for 50% business, you use it for calls and stuff like that, then you can deduct a portion of it as a business expense. So just by creating a business, you've already reduced your taxable income. Okay? It's a little complex, I get that, but the concept is simple. Employees go like this: earn wages, pay taxes, have expenses. Entrepreneurs go like this: earned income, revenue, business expenses that are deductible, and net or taxable income that they pay taxes on. Okay? That's how it is. So, here's a little summary again, and I hope I'm not scaring anybody, but I sure do hope that my incentives, my motives are very clear here. My business teaches people to leap from employee to entrepreneur, and it's not always the right reason to just quit your job, or that's not often the right decision on day one to quit your job. But starting a business on the side, learning some of these rules about how the tax law really does benefit entrepreneurs can be really important. And if you do have your own business already, then learning where you can save money and build that business even faster, even farther, then that's just going to benefit you so much in the long run. So don't take this stuff for granted. Taxes are super important no matter where you are in life, because it's going to be it's the biggest stealer of your money, okay? And the best you can do to minimize that and put the money into other areas, the better off you're going to be. Now, having said that, somebody might say, "Hey, Steve, taxes are good." We'll finish off over here. Taxes are good. We need them to build roads and for efficient, hard-working government employees and all kinds of other infrastructure that goes into living in the great country of America. And I would say you are absolutely right. Absolutely right. But the tax law is already in place and benefits people in certain ways. And like I said, the government is incentivizing people to behave a certain way for sure. But there are also, let's just say there's a basic tenet in life that people with wealth and power will use that wealth and power to maintain wealth and power. I think that's a basic concept, and I think it's very understandable. It's like a survival instinct, basically. And I'm not saying it's wrong. I'm saying that's how people behave. So if we can understand that, then we can kind of understand that this concept of old money and putting it into things like real estate and businesses, the owners of businesses and these big investors who just have money and they use money to make more money, then we can really start to understand how we can take advantage of those tax rules, okay? So yes, taxes need to exist. They will always exist if there's going to be any kind of organized government, which I foresee continuing in the near future. So, on a micro level, that survival instinct, do what you can to benefit yourself, benefit your family, your business, and your future. Okay? With that, we're always here. I'm always here for anything that you need to help you build that business, become an entrepreneur, save money, build it into a greater future. So you let us know how we can help you. All right? That being said, I will see you next time.